Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Alasdair Macleod. Alasdair's been on this show a number of times. His bio is posted at the Voice America Business Channel website. My page there, this show's page at that channel. Go there and read more about Alasdair, but more importantly, I would suggest that you go to goldmoney.com. Go there frequently to catch up with what Alasdair is writing about. And that's one of the reasons I wanted to have Alasdair on today, is to talk to him about one of his most recent articles having to do with the petrodollar. Taking the Petro out of the petrodollar was the title of his article. Thanks for joining me again, Alasdair.
That's my pleasure, Jay.
Always good to have you, even though you do have a funny accent.
I'm not going to change it even for you.
Well, you know, it's a little bit like your accent is the pure accent. Ours is the hillbilly accent from across the pond. But in any event, my wife is Portuguese, and she speaks proper Portuguese. The people in Brazil do not. So anyway.
I know how she feels.
You know how she feels, right? All right, well, you know, shortly after Nixon detached the dollar from gold, Secretary of State Henry Kissinger arranged a series of agreements with Saudi Arabia to require payments for that country's oil in U.S. dollars, and I guess he arranged also with the other OPEC countries, Saudi Arabia being the leader amongst that group, to do the same. Can you talk a little bit about those agreements and how that led to the dollar-based international monetary system that exists yet to this day?
It was a very interesting time because, America was faced with the inevitable rise in the price of oil. I mean, I think their analysts saw that. And I often wonder to what extent the Nixon shock included an assessment of the future price of oil, which might have determined Nixon's action. That was never mentioned at the time, but it was only a gap of a couple of years. And I feel sure that some of the smarter analysts advising the government at that time would have said, you know, we do have this problem coming down the road. Now, if I'm right in that assumption, then I think by the time Kissinger started negotiating with Saudi Arabia in particular, I think they already had a pretty good idea of what sort of approach they should follow. And I think it was really a constructive approach because it was quite clear that America would have to print the dollars in order to pay for the higher oil prices. And what they wanted to do was effectively to control the oil market through those means, so that while the Arabs could, you know, blackmail us, if you want to put it that way, into paying higher oil prices, at least what America wanted was for the oil prices to be determined in dollars. They were already determined in dollars, but for them to continue to be determined in dollars. Now, that was very, very important because the one area which was going to really suffer as far as America was concerned from higher oil prices was Latin America. Now, Latin America at that time was likely to fall under the sway of the Soviet Union. There was, you know, you had the sort of the Che Guevara and all that sort of stuff. And consequently, it was a very important strategic objective to make sure that Latin America stayed on side. And part of the way in which this worked was the petrodollars that were created, if you like, to pay for the higher price of oil. Instead of them going back to America and undermining the value of the dollar domestically in America, they were recycled through Citibank and other banks at that time in loans to Latin America. And that inevitably ended in the early 80s with a Latin American debt crisis. But what it did was it effectively secured the role of the dollar, if you like, as the control factor in oil prices as far as the West was concerned. And that was the importance, really, of Kissinger's negotiations with Saudis.
Well, that's very interesting. So then what would have happened if Nixon hadn't taken us off the gold system, off the gold standard? If we'd have remained attached to gold, then it would have been a lot higher and we would have had to pay a lot more. Are you suggesting for the oil that we needed to import?
Well, inevitably, by then, the London Gold Pool had failed a few years before, and it was quite clear that there was a sort of tsunami of dollars abroad likely to wash back into America, and that was even before the oil price was raised. the producers in the Middle East. So I really think that when it came to gold, the America didn't really have an awful lot of option. I mean, either they jacked up the price to something which the market would have thought was destabilizing, if you like, in currency terms, or alternatively, they just sort of went off it and tried to say that, pretend that gold actually wasn't money anyway. So they chose that course, and I can understand why. I mean, we're talking about a government. Governments don't like being held to ransom by free markets, which of course was what gold was threatening to do.
Very interesting. I always sort of thought that it was related more to geopolitics. Well, it is geopolitics, but in a different way than I had understood it before, Alasdair. I had always sort of looked at, I remember living as a young man during those days when the United States was in Vietnam, and we had guns and butter. We had Lyndon Johnson with socialism, another round of it, a greater amount of it through a great society. How was it to be paid for? Well, de Gaulle and other countries didn't, they were wanting the real stuff. They were demanding the real money, so gold was leaving our coffers, and Nixon slammed the window shut. But here you're providing, I think, greater depth in my understanding than I had before about the complexities of this, and maybe a more sympathetic attitude towards it than I had before. But are you saying then, Alasdair, would the world be better off today if we hadn't gone off the gold standard?
That's a very difficult question to answer.
Yes, I guess it's almost impossible to answer. But
I would like to take a slightly different approach. If we maintained a sound money approach to economics, the world would be a far better place. We wouldn't have all this debt round our necks.
Yes.
The other side of sound money is that people have to accept change. So you wouldn't have legacy industries being supported by government all around the world. I mean, this doesn't happen so much in America, but certainly in Europe. I mean, half of Europe basically is unproductive. Capital is tied up inefficiently.
Yes.
If we had sound money, then that just couldn't happen. So the world would be a better place for sound money. Now, what role would gold play in that? Of course, is then a sort of ways and means discussion. But certainly the only sound money that does exist is gold, simply because governments can't print it or can't expand. I mean, they can expand credit, which is the other thing. That gives us the business cycles, which is unfortunately, business cycles are actually credit cycles. So when I talk about sound money, I'm talking about something which is actually very different from even what we had in the 60s and 70s.
Right.
I'm talking about doing away with fractional reserve banking. So, it's the answer to your question is actually a lot more complex than than the answer to a simple question like would we be better off if we still had a gold standard.
Right.
It's a very, very complex issue. I mean, the answer is yes, sound money is really what we need. But if we did away with sound money, we have what we have today, which is. Can I just get rid of this?
Yeah, sure. Yeah, certainly fractional reserve banking, Alasdair. If you're there, fractional reserve banking certainly is as big a sin. I would argue as the paper monetary system that we have as well. So I can understand now. You've explained in part why the United States would want to, create the petrodollars. What would be in it for Saudi Arabia? Why would they want to go along with it?
Well, it is a two-way street because they've got to sell the oil, basically, and they need a means of being paid. I think the other side of it was that America wasn't going to tell the Saudis how to invest their money, as it were, other than understanding that they really had very little option but to put most of their money into U.S. treasuries because there was nothing else really. I mean, remember in those days the Arabs basically understood two things. They understood gold and they understood property. They didn't understand equities. They didn't understand interest-paying bonds because that's against Sharia law.
Right.
So it's really a sort of a very limited situation. And the other thing is that the beneficiaries of the high oil price weren't so much the Saudi state, it was the Saudi royal family and all their members and their hangers-on. So it's actually sort of a rather sort of difficult situation to compare with anything that we're familiar with. But these individuals had their own advisors, and these advisors tended to be Swiss private banks. And the Swiss private bankers in those days said, look, it is quite simple. You should put somewhere between 10 and 20% of your dollars into gold. And the result was that you had this enormous bull market in gold in the early 70s when it ran up from the sort of $40-odd level up to $200. It then came back to $100, and then it went on a second run, which took it eventually up to $850. But every time in that first run that America tried to push the price of gold down by having an auction, they were basically cleaned out by Arab money. So. That's what the Arabs did in those days, and they accumulated very substantial piles of gold, and they have still got most of that to this day.
All right, so we've had this symbiotic relationship between the United States and Saudi Arabia. I gather from your article that this may not be a relationship that lasts forever. What do you see that might threaten the existing relationship? I know you talked in your article about this new, younger leader, King Salman, who is now ascended to the throne in Saudi Arabia. What do you see that might start to cause a rift between this symbiotic relationship that's gone on since the early 70s?
Right. Well, first of all, King Salman is actually he was the brother of the previous king. The Salman that I was talking about was a deputy crown prince, Salman.
Okay.
Who is in his 30s. He's a young, energetic man.
Has a great deal of power, though.
He has. Well, yes, he has. But the problem there is that. He is advising the government. Now, the government is not the Saudi royal family. The Saudi royal family is actually very, very conservative. It's unlikely that the recommendations, in my opinion, the recommendations that he's been pushing through will actually find much traction with his own family. There are lots of people in the government who see the finances of the Saudi government as being in very poor shape and would want to grasp, let us say, a plan for the future. But I don't think that's quite what the king and and all the sort of very conservative princes would really want. So. The reason this has arisen partly is that the fall in the oil price in 2015 has left really a very profligate government in Saudi Arabia very, very short of funds. They're not getting the oil revenue that they thought they were getting. They're high spending, and consequently, they're really strapped for money. Now, this is the background to a situation where they actually had to go out, and they have, for the first time since Saddam Hussein went to... So let me get rid of that. For the first time since Saddam Hussein invaded Kuwait, the Saudis have gone into the credit markets and they've borrowed $10 billion in a 5-year syndicated loan. As well as that, they're looking to sell 5% of Aramco for a figure thought to be in the region of $100 billion equivalent. So, they're needing the money. Now, this is interesting because this is the background to the stories that were going around New York that the Saudis were likely to sell some of their treasuries, if not all of their treasuries. Now, just imagine if the Saudis decided to dump $750 billion worth of treasuries on the market. I mean, that would kill the US Treasury market. And because we're talking about the prime collateral for the whole of the global financial system, there is absolutely no doubt it would crash all markets in the West. So that just couldn't be allowed to happen. So I think, the alarm bells over, were members of the royal family or members of the government or whatever implicated in 9/11. You can see how that sort of stirred things up at actually quite an unfortunate moment.
Well, you can understand, though, why people, that suffered the loss of their loved ones on 9/11 would want to know. The 28 pages from the 9/11 report that the Congress is trying to get to have made public. I mean, you could understand. You would wonder why the government is so much against having that information released, because the Saudi Arabians have clearly left us know that they don't want that to happen. If they're not involved, why? The logical question is why are they worried about having those 28 pages passed on to the public, and why also would President Obama then be so much against it? I guess because it could stir up these markets, I guess, huh?
Well, I think that's right. And, I go back to the structure of Saudi Arabia. You have the royal family. Now, this is a disparate group of royal blood, or distantly related. I mean, typically, sort of a king in the past had several wives, several children by several wives. So you can see how the numbers just multiply out. I mean, I heard some time ago an estimate there were 4,000 princes or something. I don't know whether it's right,
yes,
but it gives you an idea of, now how do you actually control that lot? How do you ensure that none of them get involved with a very, very well-known family, the Bin Ladens,
sure,
and back them. So you can see that this is really a real problem. So it's a situation where there, by definition, could not be any control over the royal family at all. So when facts come out from redacted documents over 9/11, I mean, it is very, very likely that various important people in the Saudi royal family may well have been involved.
Yeah.
So you can see how this rings alarm bells, not only in Saudi Arabia, but also in Washington, because the implications, if they really upset the Saudis, are just absolutely horrendous. Because the Saudis do have this sort of legacy of treasuries, which they've got no reason to hold on to anymore, and furthermore, they're strapped for cash, so they're likely to be sellers of it. So. Yeah. Going back to that wise old man Kissinger, I mean, his approach to this would be to realize that these guys have got to sell their treasuries, but to get them to do it in an orderly way. And I'm personally convinced that the two special meetings at the FOMC, it was definitely not about interest rates. I mean, that's absolutely clear, because there was no change in that front. I think it might have been to do with that. And for confirmation, Janet Yellen went to have a meeting with President Obama, which tells me that there was a foreign dimension to whatever they were discussing at the FOMC. So I'm pointing the finger at this problem, if you like, as being something which the authorities just had to deal with and catch before it disintegrated into something really rather nasty.
Well, I talk about something really nasty. I mean, can you imagine if Donald Trump got a hold of something like that on the campaign trail, or if he became president? And maybe a cooler head would prevail. If and when he were in the White House, one can hope.
Well,
go ahead.
What one hopes. The only thing I would say about Mr. Trump is that he seems to me to be very good at saying what people want to hear him say, which right. Of course is very incorrect and all the rest of it. I'm told that he is a very clever man, so I would hope that if he is elected president, that actually that sense would prevail rather than him carrying out some of the wilder statements, like building a wall, between the States and Mexico, all that stuff. I mean, some of his foreign affairs stuff, I think, actually, because it's not sort of cast iron neocon theory, as it were, I think shows a little bit of refreshment in the air, but not. We have to wait and see on that one. It may not.
Yeah, we certainly do have to wait and see, and I just can't imagine. Well, Alasdair, I was just thinking, though, politician, when he's running for office, doesn't pander to the public, and unless maybe your politicians over there across the pond are a bit more sophisticated, and your populace is more sophisticated too, perhaps, than Americans, huh?
Yes. Well, I don't know about that. I don't know about that.
You guys have your hooligans at football games. Do those guys vote?
Well, we have our hooligans in politics as well.
Yeah, I suppose you do. But I mean, when we think of a Tony Blair here, a very smooth operator. I mean, I think even more dangerous in some ways are the guys that speak with silver tongues and have have a way of selling us a bill of goods smoothly. I mean.
Yeah.
So
I think it's interesting because that someone like him and also President Obama, I think what they've got actually is a lot of personality. They're the sort of people I would be very happy to have to share a dinner table with.
Oh yes, I think this.
But there are many politicians who I would not say that of.
Well, let me ask you though, wouldn't you want to double check to make sure you have your wallet when you leave or your wristwatch when you leave?
I would leave them behind.
Before you go there. All right.
Exactly.
All right. Saudi Arabia, from what I've understood, is also, concerned about loss of market share in places like China and so forth. Of Russia selling their oil to China, Iran selling their oil to China. It's my understanding, and not dollars, but local currencies, and in some cases, reportedly, gold is the medium of exchange for oil sales to China, and I think that there's certainly been meetings between Russia and Saudi Arabia and China and Saudi Arabia. Do you see the possibilities with we've had William Engdahl on this show frequently talks about the rising markets of China and Russia and India, the new Silk Road and so forth. That is taking place, the infrastructure that's being put in place for trade and banking that's going on outside of the dollar hegemony. Do you see the possibilities of Saudi Arabia teaming up with some of those countries that are considered adversaries of the U.S. and the Anglo-American Empire?
Oh, absolutely. I mean, so far as I'm aware, Saudi Arabia doesn't supply any oil to America at all now. I think that they supply some to Europe, but their main market and their main developing market is obviously Asia. I mean, you've got India, which is the real dynamic economy at the moment. I mean, that really is taking off, and you're looking sort of 7-8% compound annual growth in GDP. I mean, this is a very dynamic situation. And of course, you've got China. And you're right that Saudi Arabia, while her natural market is now Asia, she is in competition with Iran and Russia. But that really, in a sense, plays into China's hands, because China is very happy to say, we'll take your oil, but these are the terms, sort of thing. Mm-hmm. And I think there's quite a lot of that going on. But equally, I think from China's point of view, she's in a position to help Saudi Arabia out of her financial difficulties. And I think that, it wouldn't surprise me at all if that Aramco stake, if it does come on the market, China could just buy the lot. And not notice the difference. I mean, we're talking about $100 billion. China has something like $3.3 trillion of foreign reserves. So what's the problem? And furthermore, I can see China making loans to Saudi Arabia to help her through, this sort of rather sticky low oil price patch. But, again, you see, from China's point of view, that's actually a dream come true, because what she'll do is she'll lend Saudi Arabia some dollars and say the repayment terms are that they've got to be converted back into renminbi, or yuan, if you like, at a future date at this rate. And, that does, as far as China is concerned, is it means that she can see that there is going to be a demand for her currency down the road, which allows her to internationalize her currency to that extent and not lose control over its purchasing power. That's
exactly what it's been wanting to do and what it's been talking about doing. With just 2 minutes left here, Alasdair, let me ask you your view then, as I take it, on the dollar is we've seen the peak in the dollar for the near term, long term. What?
I think we've seen the peak. China has turned things round by suddenly, for her 13th five-year plan, she started buying commodities basically to invest throughout Asia, not just in her economy, but throughout Asia. And I think that means the days when people were panicking into the dollar, those days are over. And the dollar now faces the repatriation of dollars from overseas, which is bound to weaken its position in the foreign exchange markets, and particularly its purchasing power in commodities.
Now, Michael Oliver is convinced, we had him on before you, our technical analyst that is on our show frequently here, is absolutely convinced that gold has broken through, and he's looking at 1450 as the first major resistance level. Gold has certainly picked up a lot this year. Our little business is doing much better. We're very pleased with our gold shares. How are things going at Gold Money? Are you seeing some increase in interest in people owning gold at Gold Money?
Yes. I mean, it's a bit of a mixture, actually, because quite a lot of people bought gold in 2011 and obviously paid a very high price. So they've now got the quandary. They've seen the price recover somewhat. So do they sell some now? Is recovered because it might go lower, or do they stay with it? So you've got a little bit of a sort of a cross flow in it.
Right. Well, we would like to remind people to go to goldmoney.com, go to jtaylormedia.com, and click on the goldmoney.com banner, or the BitGold banner as well. And there's some very exciting services that are going on that are available. Gold Money I've known for many years, James Turk and Alasdair Macleod of that company, which is now part of the BitGold group. So I really thank you, Alasdair, for being with us. Always so good to have you. We'd like to have you come on sometime and talk a bit more about BitGold and some of the things that Gold Money is doing along with BitGold. That, I think, would be very practical for our listeners, so I hope we can have you back sometime in the near future to talk about that, all right?
I would love to.